9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We're counting down to the open of markets in Greater China. Let's get to your top stories today. Asian tech stocks getting absolutely whacked today. Tracking losses that we got, steep losses, I should note, out of Wall Street as this new round of Nvidia deals fuels concerns over circular AI funding. You have Brent extending declines after President Trump said a deal with Iran is possible.
A Chinese state-backed company reportedly starts mass production of chip-making machines, threatening ASML's dominance and boosting Beijing's self-sufficiency goals.
And we speak with the Little Tech Association, the U.S. startups leading this charge in support of open weights AI models from China and also beyond.
All right, when the chips fall, right, you can turn to see more fallout here when it comes to this ASML story. We saw what happened in Amsterdam with the stock itself on this information report about this DUV, right? We're talking about ultraviolet lithography right now and how China, and not really naming a state-backed company, but maybe making their own and making mass production of it. That certainly is sending some big shocks across the markets here this morning.
Massive moves. It's worth pointing out there's not a lot of information still, but I think it just underscores how sensitive markets are to any news that China is slowly chipping away at this dominance across the stack, of course, in the U.S. So, I think we'll look back at this week. I could be wrong. We'll look back at this week as possibly the turning point here because we had CXMT on the memory side. We could have, of course, DUV. At the end of this week, of course, we have this big listing coming through here in Hong Kong of Zhongji Inolite, which is, of course, optometrics makers as well. And, when you put everything together, you look back and say, you know what, that was probably the week that this entire AI stack just dominated global consciousness. And, SOX index overnight, you look at Korea right now, it's trading halt, I believe, at this point in time. Just underscores how crowded and maybe just the investors are scratching that itch as we speak.
And it's not just the equity market, right? We're seeing it clearly in these credit markets here right now. When you've seen the likes of credit default swaps of Nvidia, for example, surging on the back of these big sort of deals that they've been announcing with SK Hynix here, and with all these AI companies here, it brings back a lot of those concerns about circular deals once again.
It is. And really, how much can we price in as far as the debt situation is concerned? And how much debt is visible, I think, when you look at this, and certainly CapEx and all of those things. But yes, equity markets are, suffice to say, are on fairly weaker footing as we go into the session today. And A50 futures just coming online. In fact, we're lower as well. They're going into the session today in Greater China. Asia's down about 2-3%. We'll show you what's happening in Japan and Korea in a moment. Taiwan is also coming online, but certainly just underscores, I guess, the pullback we're seeing across the tech-heavy benchmarks today. Let's have a look at the Nikkei, the Kospi index, which we're now pulling back a little bit from the brink of about 8%. Taiwan is getting absolutely hammered at the open here. It's worth pointing out that a market like Oz, which actually did very well yesterday. So there's separately a commodity story taking place in these markets. We'll get to that later on. Right. Did China move against the grain? Past tense, yes. Present tense, unclear. But just to show you, amidst, of course, the sell-off we got overnight on the Philly index, a lot of the China proxies overnight did very well going into this morning. But as we now look at pricing going into the session today, we are opening lower on A50 futures on your screens, 0.5%. So it does not seem like China will be immune to the sell-off we're seeing currently. Yeah,
maybe not. And just given just the read-through that we're seeing from this information report, right? You take a look at the likes of SK Hynix, take a look at Kioxia in Japan, falling as much as 18%. For Kioxia here, touching that daily lower limit. So certainly there is some concerns here about, when China is coming through with this whole set of self-reliance sort of theme, right? But key questions are really how much narrower is that technological gap now between China versus, of course, these Western players?
Yeah, we don't know what the gap looks like
just
yet. And, I think our folks at Bloomberg Intelligence have just started to model in the worst case. They've stress tested what it would mean for the company ASML if they lost all of their revenues, which we'll get to.
China revenues.
China revenues in a moment. But okay, so what do we know? Min Lo, our China correspondent, is here with us to help us understand really the information that we have right now. No pun intended there.
Yeah, so I just want to clarify here that China is now, according to the information, able to produce DUV machines. Now, in terms of the gap with ASML, that's still quite far because the top of the range is EUV, that's extreme ultraviolet lithography machine. DUV is deep ultraviolet lithography machine. But regardless, the US has prevented ASML from selling both both the EUVs as well as the most advanced DUVs to China. So China has been able to make these DUVs. They're planning to make 5 this year and 20 next year. This is a Shanghai-based company that has gathered expertise from other Chinese firms, including a state-backed startup. And these machines are going to be deployed to, of course, the Chinese chip makers like CXMT, like Hua Hong, SMIC. It's an important breakthrough for China because even though DUVs are not as advanced as the EUVs, bear in mind that the vast majority of chips out there only rely on a DUV machine. The EUVs are only needed for a small sliver of the most advanced chips. So this is still a big breakthrough for China to be able to mass produce the machines.
Okay, we see kind of the knee-jerk reaction from investors here right now, but what do you see as sort of the market impact from this for the broader industry?
Yeah, so of course we saw the big sell-off on ASML. We're seeing a sell-off in the Kospi here. And if you look at the companies that are selling off, it's not just the chip-making equipment and not just the SK Hynix and the Samsungs. It's also the downstream suppliers of things like NAND memory chips. Kioxia, that's why it's badly hit. It's also the packaging companies. And again, it goes back to the reasoning earlier that most chips only require DUV machines. And the other reason here is also China has been attempting to replicate the effect of an EUV machine by using DUV tools. You have to expose it to the silicon wafers multiple times to etch the patterns of these resistors. You expose it multiple times to achieve the impact of an EUV. So it's a very inefficient way of closing the gap with the US, but being able to mass produce it would then reduce the cost for many of these companies. So this is also another significant development as well.
All right, Min, thank you. Our China correspondent Min Lo there with the latest from, of course, this report from the information, and really it is making waves across these markets here. Another sort of story we've been tracking, of course, really has been, first of all, we'll talk a little bit more about what our BI analyst,
Masahiro, yep.
He covers ASML, right? So you mentioned about the stress test, right? So they started to factor in, what would it mean if this company, basically China revenue fell to 0, right? And this is what Masa says, right? Sales and operating profit could drop about 20% if Chinese semiconductor tool makers succeed in developing this sort of immersion DUV lithography systems, and the company's China revenue falls to 0. So 20% impact. I think you're getting more from the sell side here this morning that maybe there is a limited risk here. Maybe, the market's going ahead of itself here, really, in terms of really where that technology gap is narrowing. Some say, I think Masa was still saying it's still about 7 to 10 years apart in terms of the technology side of things.
Well, I think the fact that is a very long time.
Yes.
But I would also say the fact that we now have a timeline for the gap to close, because the assumption for most of the markets going into this report, which again was very scarce in details, was that ASML had an absolute monopoly in the global markets. And the fact that you are getting a company, agnostic to where the company is, chipping away at that, it's going to have a repercussion. So obviously this adjustment we're seeing across prices is something we'll keep an eye on, and to what extent, of course, have we, again, possibly overshot the target to the downside. Well, the other related piece of news here, of course, is these flurry of deals across Nvidia and what they're doing across the AI supply chain. Just a snapshot of just a ton of partnerships and the massive amounts involved here with a lot of their partners in the Asia Pacific and across the world. SK Group, OpenAI in deals. Get this, more than $750 billion investment frenzy that skeptics underscore that point, say that artificially inflating demand and valuations. Winnie Xu, our Asia equities reporter here, is here to help us basically explain this financing problem.
Yeah, it is a very interesting kind of situation we're seeing right now, right? And that it has been a problem, I guess, with Nvidia since last year. But these days, because of these concerns around CAPEX, we're hearing more of these. And for example, you just had the one with SK Group, and that's a $500 billion commitment. But it's a commitment between the two of them. So that means SK Group will be buying the supercomputers from Nvidia, while Nvidia buy the memory chips from SK Hynix. So the $500 billion, we are not even sure how exactly it's committed to each other. That's why it's a bit of a circulation. And the latest one, even more complicated with OpenAI, $250 billion backstopping for OpenAI to lease a $500 billion worth of data center that SoftBank is working on. So you can see that money, $250 billion, going from Nvidia to SoftBank to accelerate that build out in Ohio. And then they can lease that to OpenAI, which they have a big stake in. SoftBank has a big stake in OpenAI, and OpenAI is a big customer of Nvidia. So that money really goes around, and it is becoming more concerning because it's inflating demand, and it potentially poses more risk if this whole AI story starts to fall apart.
Yeah, I mean, the demand question is one thing, right? Is there that demand? But then again, it's also about concentration and really whether, the funding streams that we're seeing not just in the bond market is certainly pricing that in right now. What are the market implications?
Yeah, so we can see that right now, what the market reaction is really telling us is that investors have been taking this more negatively than positively. Yesterday, we thought that investment can actually be good news for Asian markets, but when you look at how markets have actually fluctuated, even fell, investors were telling us just yesterday that they right now see this more of a funding problem instead of kind of boosting demand. And that's why we also saw Nvidia fell about 5% today and lots of pressure in these Asian chip makers today. So the question, the concern at this point is that if the capex spending is actually able to be sustainable, and that's why the upcoming earnings is so important. And even fund managers telling us that going forward, what's important for the equity space, especially for chip makers, is no longer just earnings or capex, but more of the credit market story, especially when we see bond yields just blowing up with these corporates, and that their capex is really outrunning their free cash flow.
All right, Winnie, thank you. Our Asia equities reporter, Winnie Hsiao there. And as we've been talking about, we're watching this chip sell-off deepen a bit here. Let's take a look when it comes to the Kospi here this morning. So we were falling some 8% right now, which was nearing some sort of trading halt. We're just on the cusp of that here at the moment. Interesting enough, it's really, you're seeing that read-through from U.S. and really what we saw in the SOX index. the SK Hynix ADRs fell below that U.S. IPO
the listing price. Yep.
So that certainly is seeing that filter through across the region here today.
Yeah, and we're down 8% on that. So, we'll cover all of these topics across the shows today. So Winnie just talked about some of the credit spreads blowing out. In fact, we're going to have more on the circular financing concerns that are coming through. We're continuing that conversation specifically with discussions coming through. So Monica Hsiao joins us out of Triada Capital. That's number one on credit spreads. And given, of course, this pullback we're seeing in equity markets, SocGen joins us to talk about the equity markets implication of this. And on the broader geopolitical overlay on open weight and access to open weight, we'll be joined by the Little Tech Association. Of course, they very recently, a few days ago, wrote a letter to the White House. We'll talk more about reception and what they're hearing and where they think the story goes. Harry joins us at about 9:30 in the morning. That's in about 17 minutes. At about the same time, of course, as the opening bell, which we're counting down to here in Hong Kong, up in Shanghai, and in Shenzhen. This is The China Show. All right, another day, another sidecar halt in Korea. Just to borrow, I guess the very popular song of Tracy Chapman, similar name. This market is moving quicker than a fast car, getting these triggered. So another day. So I'm losing count now of the number of days this month that we've seen either the KOSDAQ or the Kospi just get halted because of just how volatile things have been. But yes, that's where we are currently. So we'll revisit, of course, what goes on there in about 20 minutes when things, of course, resume trade. Joining us here on set to help us make sense of where exactly we are on the Kospi story and the broader Asian markets. Joining us here is Frank Benzimra, Head of Asia Equity Strategy at SocGen. Frank, very nice to see you and good morning. Has Korea come up?
Korea is by far the most volatile market. That's very interesting to see that the company now, the semiconductor companies are publishing record earnings, but we are at top margin, and the market is reminding that this market is cyclical. And we have, on top of that, and maybe a little bit unlike what we see in the US, we have the leverage, which is super concentrated on few names. So when we put all this, we have this volatility on the market.
What to do now about, what's the advice to clients about Korea?
Well, there are two Korea. You have the semiconductor Korea, where you have some deleveraging which is happening, which is not being done, and on which we need to be cautious. And then you have the other Korea. You remove the top two semiconductor name, then you have a price to book of 1.5 times at a time when you have some governance reform which are happening and a pretty good level of earnings. And I think this is this kind of Korea that we need to focus on now.
Is that going to, do people pay even attention to that? So like if you remove the two out of Korea, how much attention do you think people are willing to allocate?
I think that's really the example of the momentum trade,
right,
where you have this reversal of momentum. But I think if we want to be a little bit more fundamental, take a little bit more of a longer view, this is where you will find very good investment opportunities.
How to find a floor on this market, though? I mean, what indicators are you looking at? Is it more about what happens with the retail sentiment? I mean, what are you looking at in terms of indications of a rebound?
Well, first of all, we are looking at where we are in the deleveraging process. And to look at that, we are looking, number one, what kind of AUM we have in the leverage ETF, what kind of outflow we have. And we start to see some outflow in the leverage ETF on the single stock. Then we look at what kind of margin call do we see as a percentage of the total margin. So all these indicators are giving us some indication, just indication where we are in the deleveraging process. And probably we are well advanced in the deleveraging process, but we are not yet done. And I think we need also to look at where we stand in the cycle. Now, you look at the flash memory name, whether it is in the US or in Korea, you are close to 80% margin. So which is a historical high, which is higher than Nvidia, than other name. And then you need to wonder whether those margins are sustainable. And to bear in mind that this market, they are still cyclical market and there is still a cycle and it's starting to bite now.
The broader backdrop here is maybe away from memory, but there's also been a similar sell-off in the U.S. chip space. Where do you think we are on that correction?
Yeah, the U.S. is a market that I'm not looking as closely as Korea, but I think we have the same kind of fundamental in Korea and in the U.S., where the guidance that the hyperscaler are going to give or are giving to the rest of the market is very important to assess the kind of acceleration in spending that we have. And you have, within the semiconductor, you have a similar split between the flash memory, very cyclical, and the AI chips on which you have a little bit more stability in the earnings.
Okay.
Everyone's tracking where the rotation lies now. If it's not going to be in these two names in Korea, I mean, where are you seeing the most sort of opportunities elsewhere now?
Yeah, well, I would say in Asia, if I remain at a very macro level, to have a long position on Taiwan versus Korea is one trade that we are proposing. Another that we are reiterating is to have a long on the topics, which is much more diversified, especially with financial and banks being well represented, versus the Nikkei, on which three names are explaining most of the return. So I think this is the kind of rotation that we are advocating now.
The call in the topics, is that a call also in financials, or is the financials overweight?
No,
something separate to that.
The call on the topics is a call on Japan.
Okay.
It's a call on the boosting growth, that earnings growth that we are seeing from more nominal growth. which actually it's a bearish on bond, but it's quite bullish on earnings. And the topics is very diversified. It is not too concentrated into few names which are having the same kind of cyclical issues that we are finding in Korea. And then we have the banking sector. We have a number of other sectors that we lack within the topics.
In terms of the earnings season, I mean, what are you focused on most?
Yeah.
Given just, it seems like expectations are quite high.
Yeah, well, first of all, what we observe is if we look in the US first, the earnings season is very strong. Roughly for 3 upgrade, we have 1 downgrade, so that's quite a good ratio. When it comes to Asia, the earnings season has just started. So what we've seen in the semiconductor business is that it's still pretty good. Actually, it's not giving any indication that there is a slowdown in the capex. What we see as well in Korea, we had few names where we could see in the automobile sector, we can feel a little bit of some competition from elsewhere. And what I'm really going to look at in the coming days, in the coming week, is China. What kind of earnings we are going to have, whether the consensus, which is not too demanding, is going to be beaten, and whether we can see this AI space, which has been suffering in the recent period, to recover. So this is, I think, the focus could be on China.
Well, I mean, China's outperformed 3 going on 4 weeks now, I think, compared to the S&P. How are you looking at that rotation?
Yeah, so you have a kind of a double rotation of China outperforming, and then within China we've seen the laggard and the offshore China, which has outperformed the mainland China, and we see this more as kind of a catch up, and we think that mainland could recover with the earnings coming on.
All right, Frank, we've got to leave it there. Thank you, Frank Benzimra there, Head of Asia Equity Strategy at SocGen. In terms of your agenda here for Greater China, of course, we're still watching this whole ASML impact here, and really what we're seeing across the ripple effects of this information report talking about China has been able to mass produce its own DUV tool production. So certainly continue to watch the chip side of things. How does it impact the domestic players in some ways? Day 2 of CXMT, right? We're talking about north of 40% gains on the listing debut. So certainly we'll see how that impacts, and really how this ASML story could help or not when it comes to CXMT. There is an SCIO briefing coming up there in China. Also watching the optical side of things, chips, brokerages as well, and we do have some chip earnings coming through here from ASMPT.
Yeah, that's something to watch today. On the broker side, of course, we have more details now on this merger as it pertains to 2 Shanghai brokers, so we'll talk more about that in a moment. We're looking at a Hang Seng Index. We're now actually slightly to the upside there on that specific benchmark. 8 shares are doing okay, about 0.4% of 1%. Obviously, a couple of stocks going to be very much in focus today. Everything from the sort of hardware stack on some of the SMICs and Huahong Semiconductors, and we are getting a pullback across that, actually, quite surprisingly today. Down about 8% on Giga Device here in Hong Kong. Coming up as well is some of your big platform companies. Actually, Minimax is something to watch, of course. I think this one, actually, there was some conversations yesterday late in the afternoon session. I think we'll get more on this in a moment. Plus, of course, it's now ZAI, in case you missed that here off last week. It's not called ZAI again.
Yeah, and I mean, this is the news that really triggered this whole debate about open weight models, right? Between Nvidia, Anthropic, and the like. We're getting a little bit more updates from the likes of Anthropic on Monday, given this letter that was released. And so we're talking a little bit more about that, right? And really, the tech community continue to talk about whether there needs to be some sort of blanket ban on these Chinese AI companies and AI models. But certainly, there's a lot to talk about here. We're going to have a great guest coming up as well. CXMT, there you go. So we're coming off the really stellar debut from yesterday.
Yeah, we've gone from $8 to about $50, and we're pulling back going into the day 2 today. So we'll have the open coming up next, including, by the way, I should also mention the resumption of trade in Korea after the trading halt about 15 minutes back. So that should be resuming trade. We'll get the open coming up next, 3 minutes away. This is The China Show. Welcome back and good morning. Welcome back to the program here watching the China show. So the greater Chinese markets are set to open amidst this really steep sell-off we're seeing across markets outside of Greater China. I have to correct myself, just the terminology here. So the sidecar was activated on the KOSDAQ. It's a full trading halt currently on the KOSPI, which in a couple of minutes resumes trade because that 20-minute trading halt then lifts, and then we'll get that at about the open as well.
Yeah, there's certainly a lot of cross currents that you're talking about here. Obviously, this whole China DUV sort of lithography, whatever innovation that we've been seeing, according to some reports from the information, that certainly is roiling the chips trade here today. You add that to the Nvidia story and these big, massive frenzy of deals that they keep making here with the likes of SK Hynix and the like is once again sparking those concerns of circular deals, right? So you're seeing that being reflected across the bond market, credit market, spreads are winding out and the like. So there's quite a bit of angst, not just in this equity market, but also when it comes to bond markets as well. Take a look when it comes to the open in China, and they are not immune to this sell-off here today. You see the Chinex, specifically the tech-heavy benchmark, that's already lower by 3% here right now. You are seeing some big names like Capricorn Tech, that's down by 2%. CATL also seeing a bit of pressure in the A-share market. But interesting enough, in terms of bright spots, it's the consumer space, right? So maybe there is a bit of that rotation out of those AI plays here this morning to the likes of Medea Group, Queijiao, Maotai, and the like. When you take a look when it comes to what we're seeing across the tech gauges here, obviously yesterday it was about CXMT. We are seeing even that stock come off just a bit here today, but this is what the chips sector is seeing here. So you are seeing like the Hua Hong Semi. SMIC is actually going the opposite direction, but most of them are slightly lower here on the back of this report, right? You know, this whole, we saw all happen ASML shares on just one report itself of what China may be doing. A state-backed company in China is mass producing these deep ultraviolet lithography tools. So, this adds to the whole kind of tech self-sufficiency sort of theme that we've been seeing alongside CXMT yesterday. How true and how much it delivers is certainly one thing that the sell side is really mapping out here today. I think most of the sell side have chimed in and said, look, when it comes to that technological gap between China and Western names right now, it's still quite wide, right? Masahiro, our BI analyst, is saying it's 7 to 10 years it would take to actually close it at this point. So maybe right now markets are going ahead of it.
Yeah. The assumption was there was no gap to close. They were so far behind in as far as not even having a starting point, but now there is, right? There is something further to close now, I think is one of the key bits of information there. But this is also coming together on the back of, and I think you probably heard us talk about this from yesterday and this big CXMT listing, and we opened lower 7%, we're down about 4% now. So Yvonne just mentioned the sell side, which is interesting, right? So I would imagine a company this big, and at one point yesterday, CXMT was actually China's most valuable company. It was more valuable than Tencent. It pulled back a little bit towards the close, but a company this big, I'm looking at my terminal, and only has 3, at best 4 analysts covering the stock that we know of, which I imagine, this is just me speculating, that the sell side is perhaps waiting for this to settle, and then they're going to maybe come out with their forecast and what have you, just because of how quickly the stock has gone up. But yeah, I mean, on the back of that note, right, Nomura was the one we talked about yesterday, 116 price target on the stock. Mizuho came out, I believe yesterday as well, late yesterday, but also a buy recommendation, but they're about half the target of Nomura, and they have about a 70 target. BNP actually has a price target as well of 44. So just a dispersion, that range of forecasts here. I guess not so much a reflection of the fundamentals of the company, but really the market dynamics of, because it was priced at a discount,
low,
right? And we're trying to figure out where the equilibrium price is after a couple of days here.
Yeah, our Bloomberg columnist Julie mentioned this in her column this morning, that basically she thought this 10 billion IPO was a bit of a flop because it was priced so low. They could have made much more money, was her argument here. But certainly that's one thing to look at here today. It's not really the CXMT story now. It really is all about ASML, right? Yeah. And let's get a bit more about what we got from Bloomberg Intelligence. Yeah. So senior analyst Matsuhiro Wakasugi did talk about, what the threat that this information report is saying to ASML, right? And, for one, the sell side is saying it could be just a limited threat at this moment to this company, given the fact that, as mentioned here, the main focus is EUVs, which ASML excels at.
And
China right
DUVs,
now is just DUVs, right? So that's certainly one thing. So But they did also stress test, right? If ASML actually had to factor in zero China revenue, right, their sales and operating profit could drop about 20%, right? And once again, talking about that technological gap, he says it could take about 7 to 10 years, really, for China to close that gap.
Yeah, Masahiro Wakasugi, I would imagine, is one of the busiest people on Bloomberg Intelligence today within that universe. I believe he will be joining us, we'll see, later on in the program to help us really unpack this and also what it means certainly beyond the company's footprint and what it means for the broader industry and the entire supply chain that markets are currently just selling and asking questions later. You know, the other debate, but certainly related to this, right, in terms of what parts of the AI story is China showing up either at the frontier or a few steps behind the very frontier? And it brings to mind this open weight debate, right?
Oh, yeah.
On open weight AI. And, you've probably seen a lot on social media from the big tech CEOs and, these trained parameters that are publicly available, open weight here, available for download. The release of Kimi K3, of course, that's out of Moonshot, really ringing a lot of alarm bells over in Washington, including allegations of IP theft, threats of a crackdown, but Silicon Valley is actually signaling and singing a different tune. This coalition of nearly 180 startups and tech founders calling itself the Little Tech Association, a few days back signed a letter addressed to the Commerce Secretary, Howard Lutnick, saying American AI leadership requires two things: world-leading American open-weight models and continued access for U.S. builders to then open models already available worldwide.
Yeah, and today Anthropic actually weighed in on this debate, right? The CEO, Dario Amodei, is saying that they've never advocated for a ban on open-weight models, and those without, quote, dangerous capabilities are a public good.
Yeah, joining us now from Washington is Harry Godfrey, Executive Director at Little Tech Association, a group representing nearly 200 venture-backed U.S. startups. Good morning from the Asia Pacific, Harry. Thank you for taking the time. It's probably been a busy last few days ever since this story broke. But let me start with a simple question. You guys have written a letter to the White House, Howard Lutnick. Have you heard back?
We've certainly gotten receipt of that letter, and we have a good dialogue, I think, going on there. There's going to be more conversation in the days and weeks to come.
You've been very vocal, Harry, and of course, and your representatives, in your opposition of a sort of ban. Are you worried that there are growing signs in D.C. of people really starting to support some sort of ban on these Chinese AI models?
Yeah, well, this letter started probably about a week and a half ago. We represent about over 200 startups, digital innovators, early stage investors, and we were hearing chatter about the risk of the possibility of a ban here. And that would be an existential threat to hundreds of companies that utilize a variety of open source models, not just those out of China, but those from all around the world. So what we wanted to make certain in this conversation was to distinguish between some of the overheated rhetoric we were hearing and some of the reasonable safety concerns. And that's why we wrote this letter. It's a letter saying absolutely the presumption should be maintain access to open weight models, but let's articulate a framework for how policymakers should think through where and when and just how to do a light touch security measures where it's absolutely necessary. That's what we were really trying to sort of thread the needle on here.
Yeah, I think that's an important point to underscore because people talk about this almost as a zero-sum game. It's either a 1 or a 0, and that's a spectrum of fully open to fully restricted. Would you be open to, pun intended, would you be open to some level of restrictions, but of course remaining largely open to open weight?
Yeah, I think you see us articulating places where we think that greater caution or degree of regulation is reasonable. When we talk about specifically national security uses, critical infrastructure, those are places where I think it's reasonable to have additional conversations. The other place for particular scrutiny is whether we're talking about an open weight model that is sort of broadly accessible or a frontier model. And there we have to sort of start from the position of most of the frontier models actually already exist in closed weight environments. Those behind the frontier are more open weight in nature. And so there needs to be a sort of distinction in folks' minds about just what the degree of advancement is in these models as we're having that conversation.
What about the concerns of distillation? How do you kind of respond to those sort of concerns right now? Do you think they're a bit overblown?
I think there are two ways to think about this. The first one is look from a pure intellectual property theft standpoint. That is a serious issue for big companies and small companies alike. And certainly companies that are a coalition are worried about those sort of issues and absolutely want to go about addressing them. So where there is a serious allegation of distillation, it should be thoroughly investigated and appropriately adjudicated based upon the evidence that is derived from that. That being said, the development of all these AI models is to a certain extent, and we've heard this from folks as prominent as Jensen Huang, a distillation of prior models and additional research. And so drawing the line to say this is a distillation and this is not, I don't think it's as clean or bright a line as possible. And we wouldn't certainly want to see an overreaction happen there, in response to that. So I think we need to go about making certain this is a very deliberate process and that any actions undertaken are proportionate to what has actually occurred and substantiated in the evidence.
Yeah, and Harry, the open dialogue, which, to some extent we're having now, a lot has to do with your letter, and of course we are having an open dialogue, to your point, with regulators on your side. You mentioned overreaction. It was quite a strong word that you used as well, existential risk. Just a theoretical thought exercise. What if Chinese models disappeared tomorrow? What would happen and why? Just take us through a tangible sort of what sort of effects would we see with your members?
Yeah, I think that, the wonderful thing about open weight that folks need to understand first, I think the process of applying particular labels, this is a Chinese model, this is a European model, is a little bit of a misnomer. It's an oversimplification of this conversation. Yes, a set of these models are coming out of China. Some are coming out of the United States. Some are coming out of Europe and elsewhere around the world. Once somebody has an open weight model, they download those weights, they utilize it themselves, I think it ceases to be from a particular country of origin. So even if tomorrow Chinese models suddenly disappeared, there wasn't any additional production, you'd already have the open weight models that existed there to build upon. And so I don't think that would necessarily impact that. But over the longer term, we do really believe that the sort of dynamic of competition is so critical to continued AI development. Let me be really clear about this. The Little Tech Association is comprised overwhelmingly of companies based in the United States of America. We want to see the United States win this AI race. And the only way we think that is possible is if we out-innovate our competition. And the only way we out-innovate that, the only way we ensure that there is that sort of relentless and constant innovation is if there is real and clear competition around this. And that requires having both open weight and closed weight models out there. So no matter where they're coming from, what we think is critically important is ensuring that there's continued access to open weight models. That's why at the end of the day, we wrote the letter.
Harry, you also mentioned that you cite that rural hospitals, defense equipment suppliers, cyber security or cyber attack response teams as the people and groups who need these models. So can you clarify a little bit that? Do you think a defense supplier should be able to use a Chinese model?
The ability to go into the Chinese model, to understand what is in that, to then take it, deconstruct it, take out any security risks that they may identify, host it on a local server. I think what we were really talking about there was the ability to have access to a model that isn't hosted anywhere else, that somebody could actually bring it entirely inside their fence line. It's the same reason why open source models are so important in the healthcare industry as well. The ability of a healthcare provider with extremely sensitive patient information to keep that information entirely inside the fence line rather than having to go to a closed weight model that exists beyond that fence line is so important. So from a security standpoint, one of the real benefits of open weight models is the ability to actually bring that inside the fence line, host that on their own servers in their own systems, rather than relying upon someone else to do that, wherever that host may be, whether that is in the United States or elsewhere around the world.
Harry, end of the day, how do you think, with the information that we have now, how do you think regulation changes moving very, very short term, perhaps?
We've been really encouraged to see what the sort of how the conversations evolved over the past 7 days. We heard a week and a half ago about chatter coming out of Washington about the possibility of sort of a blanket ban on access to open weight models. We were deeply troubled by that. So on Wednesday, we issued this letter stating Here's why it is so important to maintain access to open weight models. Here are some reasonable security parameters that you can think about from there. 48 hours later, we saw an additional letter come through from a variety of companies, including Nvidia, Microsoft, Meta. And then I think we've seen the conversation continue from there. We saw OpenAI and Google over the weekend express their support for it. And then, as I think you all noted in the intro as well, just today we saw Anthropic and Dario Amodei come out and say, we've always been in support of this. And so, we are cautiously optimistic that the conversation has turned, that there has emerged very quickly a broad consensus about the importance of maintaining access to open weight models. I think from here, it's about moving through some of the finer board details around safety dynamics, around continued competition and innovation, and how do we continue forward from there. LTA is going to continue to be engaged in that because that's of the utmost interest to us.
Harry, it's great to have you. Thanks for staying late for us. Harry Godfrey there, Executive Director at Little Tech Association. As we were talking, this Korea market has resumed trade here after, of course, that trading halt was triggered. So that circuit breaker has been lifted. This is what we're seeing across that market here right now. We fell as much as 8%, obviously dragged down by, of course, these chip makers here, the likes of SK Hynix and the like. We're still seeing quite a bit of pressure here. And really just in the last 45 minutes or so, we did also hear from some of the regulators in Korea said that they may be preparing or will prepare additional measures to curb demand for leveraged ETFs, including the likes of imposing investment limits on individual investors. So they might be still have some sort of curbs in place here because it seems that the latest curbs did fail to work.
I'm confused now, which I guess partly explains why, despite the price collapse we're seeing, I'm looking at volumes actually, we're down about 40%, so we're 40% lighter than usual, which I think with the uncertainty of not just price, but what will eventually be banned and allowed in the market. I would understand why people would be staying away for now and just waiting for this to settle.
Exactly what Frank Benzimra said, right? From SocGen, that in terms of the indicators, they're still tracking this deleveraging process in Korea. We're not quite there yet in terms of finding a floor because everything that he's seeing when it comes to outflows of some of these leveraged ETFs to even margin debt, we're seeing some of that, but not quite there yet. All right, we have plenty more to come. This is Bloomberg.
All right, we're about 18 minutes into the second day of trading on CXMT, and what a first day it was. So we settled around 466% to the upside. Note the IPO price was at about 8. We did about 50. We're at about 48.50 currently. And so here's how that actually stacks up against some of the the best opening days. I feel like I'm talking about movies here. For companies that raise at least $1 billion from their listing. This is in mainland China specifically. And suffice to say that this one has stacked up quite well.
Yeah. It's certainly one for the history books for sure. And when you take a look at DeepSeek's billionaire founder, Liang Wenfeng, he's also one of the big winners in the blockbuster IPO of the Chinese chipmaker CXMT. So his investment firms were allocated the most shares among local hedge funds. Let's get more on this with our managing editor for Asia Finance, Investing in Wealth, Lulu Chen. So tell us the details and how juicy were these returns for the hedge funds?
So it's Liang Wenfeng and many of his peer funds making a windfall from this IPO. Liang's two hedge funds, Ningbo High Flyer and also Zhejiang High Flyer, those two alone made in paper gains 820 million yuan from that 466% pop yesterday. And they weren't even the ones that got the biggest allocations. So they were one amongst 100 private and hedge funds that got allocations. The mutual funds in China's industry also got more allocation. Funds like eFund and also UB Quant, which is another big hedge fund as well.
I can just imagine some of the banquets last night on the back of that first day. So talk to us about that, the other funds in the industry, and what was behind this craze.
Yeah, so hedge funds actually have a tradition or a habit of buying into IPOs. It's because of China's A-share market where you see these crazy first-day pops in the share prices, and that's a good way for them to make returns. The retail side of it, the other side, which is like 10 times the order book value compared with SpaceX. That's the kind of size and scale that you saw from this IPO yesterday.
Okay. I wonder if that's why they ditched the fundraising round, because they made so much money on the hedge fund. No, that's not the story. Okay, but yeah, DeepSeek is involved in this too, the hedge fund specifically. All right, Lulu Chen, thank you so much, our managing editor for Asia Wealth Investing and Wealth there. Now, just to note some of the things and themes that Lulu mentioned, right? So I think Shuli Ren, out of our Bloomberg Opinion, has talked about how it wasn't exactly a successful IPO because they did leave money on the table, and some of the hedge funds, of course, benefited from that. That's really more the regulatory, structural perspective of the Chinese market. And separately, we also have a wealth angle on this as well, in the case for our reporter Diana Lee, of course, this is written about that. So just to mention, we'll talk about this later. Markets are doing this. This is Bloomberg. Yeah, just to note, some news lines coming through here out of Southeast Asia. You have the Philippine peso and the Malaysian ringgit, respectively. The governors of central banks there have been commenting in the last 30 minutes. Let's start with the Philippines here with Governor Eli Remolona talking about how they have intervened in the FX markets in small amounts. He's also giving some guidance here in as far as inflation, and obviously the weaker peso could lead to inflation rising. Now, separately, Bank Negara, the governor, also speaking at a briefing in KL, this time discussing the macro, that the growth is set to stay firm. Inflation, in their case, remaining manageable, but may grow in terms of GDP growth at the upper end of the 4 to 5% forecast. Okay, from the macro, let's have a look at some of the lithography-related stocks, of course, given the reaction we're seeing based from the report from the information on some of the breakthroughs we've seen in DUV in China, and we're getting, as you can see, some reaction across the supply chain there across mainland China. Very quickly, mainland markets are doing this. We're coming off a weak open. I should note we are still looking at a weak open there in the first 25 minutes. We're still 1.5% to the downside. The outperformance that Societe noted in offshore China continues today with 1.6% to the upside on the Hang Seng Tech Index. On aggregate, China has done very well against U.S. markets over the last 3-4 weeks. We'll see, of course, whether that streak can continue. We have lots more ahead. This is The China Show.
All right, shots of espresso for everyone here this morning as we continue to track all this sort of sell-off across the region here. As you can see in Shenzhen, that's where we're feeling it, and really kind of echoing what we're seeing across the rest of Asia. We're down some 4 on the Chinex here this morning. CSI 300 onshore stocks seeing more pressure than offshore here, which is interesting as well. So we are seeing that rotation back into Hong Kong. But then again, you look at the rest of this region here right now, Dave, and we're still feeling the effects of not just circular funding, but also some competition fears from China as well.
Yeah, emerging in a very big way overnight, going into the session today. Have a look at Asia cash markets. We're doing this. We're down about 3% on the benchmark. We have taken out the 100-day moving average to the downside on MSCI Asia Pacific, in case that kind of thing floats your boat. S&P futures bottom of your screens. European futures coming up as well. I'll look at individual names across the chip space in the region, and some of the crowded trades in Japan are really peeling back substantially today. So Kioxia, last we checked, was down about 60% from the peak, not today, although that's the kind of sort of magnitude we're looking at today. Although when I look at volumes across some markets like Korea, which of course you had to halt in trading there, perhaps underscores why you did have a lot of lack of volume there, has resumed trade. But yes, this is the world we're in. CXMT is now up slightly after opening lower on day 2 on the stock there itself.
All right. So 467% gains since the first. Yeah, pretty good. Yeah, we continue to see the sell side continue to come up with their price targets, and it's really kind of just been quite dispersed as well. But for more on this top story, right? This is the key thing to watch today. DUV, deep ultraviolet lithography tools.
I don't know what that means.
Yeah, I had to learn about it this morning as well. That's been really rocking these markets, and what we heard from the information in this report about what China and a state-backed company has been doing. Let's bring in our team, our China correspondent Min Lo and our markets reporter Anthony Stevens joining us now in our Hong Kong studios. Min, we'll start with you. What do we know about the scale at which these Chinese state-backed company is in terms of mass producing these DUVs, and what sort of threat could that be?
Yeah, so this is according to the information's reporting, and they have not named the Chinese company, but we know it's a Shanghai-based firm that is apparently planning to produce 5 of these machines this year and 20 by next year. So this is a pretty fast scaling up of a technology that for a long time has eluded China, right? It's a sector that is absolutely dominated by ASML, which for now has been prevented from selling its most advanced machines to China because of US export control rules. So what China is able to produce is the DUV machines, deep ultraviolet machines, which is lower range than the most advanced machines out there by ASML, which is EUV, extreme ultraviolet lithography machines. It's still very significant because the vast majority of chips out there only require a DUV. So that means China is really closing the gap in some ways, even though some analysts are saying it's still about 7 to 10 years away from matching what ASML can do, but it's still a significant breakthrough for a company.
So, Anthony, it is a breakthrough. They're still behind in terms of years. Why are we getting the sort of reaction in markets that we saw overnight and into the session today?
The key point here is the mass production of DUVs, right? At the moment, Chinese chip making has very low yields. It's very inefficient because they use DUV instead of EUV. But if you put a bunch of DUV machines together, you can offset that bad yield. Low yield, a lot of machines, you kind of balance out to the same. And the reason you're seeing the market reaction is a lot of these chip names have been priced as structural demand stories. But if China can pump volume into these different chips, given the amount of DUV they may now have in 2027, a lot of these chips become cyclical pace. They go back to how they used to trade back in the smartphone universe or back in the laptop days. Stuff like capacitors, stuff like passive components, stuff like motors and photonics. These names have been on an absolute tear because China has not been able to make HBM and GPUs at the same time as these other components. The profits are sitting there for Chinese players to take, and with the DUV, it looks like they can.
So in terms of the most impacted sectors, what are you seeing here right now?
It's actually, you just look backwards from what are the most technologically advanced, right? The least technologically advanced chips are getting hammered not only in Korea and in Japan, in the US, they're also getting hammered onshore in China. So that's, for me, been the biggest surprise of the day, how hard the Chinese local ecosystems in simple chips is getting hit. But the more kind of differentiated, high moat chips like GPUs and CPUs down the line, those will get differentiated, but there China is hitting the demand by these LLMs that are very efficient in using compute. So demand and supply being impacted by China here.
Min, what's the take in mainland China? How is this being covered?
Yeah, there has been a lot of coverage because obviously the tech race is a very important issue between US and China right now. And of course, the Commerce Ministry has also hit back against any potential sanctions from the US and calling the US accusations of IP theft a smear campaign. And of course, on Chinese social media, this news from the information about the EUV machines, or DUV machines rather, that has also been heavily discussed, right? And here you can see, especially mainland Chinese investors closely scrutinizing this. And here is someone who claims to be an investor in China saying that there are still a lot of areas where China can make huge breakthroughs, right? Particularly when it comes to high-end GPUs, CPUs, HBM. And there are other commentators also saying that this shows that China is systematically dismantling US hardware hegemony as well. And some are even saying this is the arrival of a new industrial wave, because you got to take it in context of everything else that's happening, right? It's not just the DUV machines, it's also the listing of CXMT, the launch of Kimi K3, all of these really forming this self-contained computing ecosystem that is resilient against any US export controls.
Yeah, it really has been a week when it comes to Chinese innovation and the like. Anthony, talk us through what the sort of the new narratives are around this whole AI theme as we get to a very busy earnings season coming up.
Yeah, we're getting a lot more dispersion within the AI trade, right? Like AI up, AI down, there is now finished, right? We have to really do the homework around what continues to hold up against this China innovation into the second half. This is meeting very complex positioning. For example, Korean retail or Korean domestics have bought $103 billion from foreign sellers. Now they're down 8% on that today, right? How much pain can retail take globally as they look to deleverage and kind of take down some of this risk and hold on to some gains into the back end of the year? And the second part of the dynamic that's important is the consumers of these chips may start to benefit in the second half. So you're seeing strength in the HS Tech today. Yesterday was very notable in the US session that Apple, Amazon, Microsoft, Oracle traded up despite the semi-sell-off. So that could be a new dynamic emerging in the second half.
We're down about 5 points now on the Stocks 50 contract as we go into another trading session in a couple of hours in Europe. Min, just the impact on ASML, for example, how do we need to be looking at that going into the session?
Yeah, obviously we saw a big sell-off yesterday, and we continue to see a sell-off in the Asia session with Korea being hit, Taiwan being hit, and Anthony talked about how it's not just the suppliers of ASML that is getting hit, but also the downstream clients of, say, SK Hynix and Samsung, like Kioxia and NAND memory maker, some of the packaging companies, and that's mainly because when it comes to the DUV machines that China is able to make, Anthony pointed it out earlier that the DUV machines can essentially mimic what the EUV machines do, but less efficiently. So the EUV machines just need to, go over a wafer once to really precisely etch the resistor patterns, but then you can use a DUV machine and etch it multiple times to achieve the same effect. So it's inefficient, but as soon as China can mass produce the machines, it brings down the cost for them as well.
Okay, I think I understand it now. Maybe.
It's tough to wrap your head around it. Really.
No, let's get another coffee. Thank you to the team. Fantastic work there. Of course, our China correspondent, Min Minlo, and Anthony Stephens here, our markets reporter. Coming up here in shows, the other suspect behind, of course, the sell-off we're seeing today. So we just talked about the China angle. We'll talk about the Nvidia angle here, the $750 billion AI deal spree that's fueling concerns when it comes to the credit quality and credit markets, the circular financing idea. So joining us in a couple of minutes, Monica Hsiao out of Triada Capital will be joining us to help us understand that's part of the debt stack. And as we go into things like CLOs, for example, Schroders Capital, Michelle Russell-Dowe joins us on that specific part of the capital structure. Lots more ahead. Suffice to say, this is the China Show. Right, welcome back. So the Fed's coming up. This is coming against the backdrop of maybe initial early signs of strains in the credit market. Circular deals certainly having an impact here. The long-term viability of AI funding, the CapEx spend, and at what point does that become an issue in the cash flow side. Anthony Stephens is here with us to talk about this dynamic we're seeing in markets, Anthony.
Right. It's taken some time for this concern to really metastasize, right? Nvidia CDS was trading relaxed for a very long time, and that's because demand for AI was not in any question. Right now, you're getting demand becoming a question in the market because of the rise of Chinese LLMs. That's putting the sustainability of Nvidia's investments in focus. Bear in mind, Nvidia CDS is still very cheap. It's around 80 basis points per year, but there's been a material repricing of the safety of that debt. In contrast, kind of SoftBank's CDS has stayed high for a very long time, but it's also having this kind of hockey stick effect. This is very centralized within the AI ecosystem itself. The rest of the credit universe is extremely relaxed. So you can see that this is a very sector-specific dynamic. Now, does it matter for markets as a whole? The CDS market is a very niche play on blow-ups in the credit sector. No one is arguing that Nvidia is going to go bust anytime soon. But the ramification is that the cost of raising AI financing is going up at the margin. And with a huge DCM backlog in the back end of the year, the pricing of these deals comes into question when CDS starts to do this. And as a result, the demand for semiconductor equipment, semiconductor chips, GPUs, and CPUs from that financing, from these data centers starts to get called into question on the equity side of things. So this cross-asset correlation and cross-current is going to become a very important factor in the second half of the year. Does the money continue to flow from fixed income into equities on the AI semiconductor trade?
Good point. All right, Anthony Stevens, our Bloomberg Markets reporter, really great in terms of highlighting the stress that we're seeing when it comes to these credit markets. Let's bring in Monica Hsiao, founder and CIO at Triada Capital. She's the perfect person to really talk about this here right now. So you're starting to see some of these big tech companies like Nvidia becoming almost financial players in this whole AI infrastructure build out. Do you welcome this sort of tech-led issuance, or do you see red flags?
Well, I think that the high concentration in developed markets, bond, and when you look at the amount of issuance, there's certainly some impact of crowding out. However, one of the things that we notice is that dealer inventory hasn't actually moved that much. It's increased some, but not that much, which kind of implies that real money, the long-only all-in credit yield players, are still absorbing some of this inventory that's come out. We are getting some jitters, and to some extent, some of the widening overnight is also due to all this rumor about Google tapping. So I think that's also something that everybody is watching to see how that gets absorbed.
You mentioned crowding out what specifically? Like, what do we need to be watching as far as that specific angle is concerned?
So, I think that in recent weeks there was some discussion about whether Treasury yields in part was, wider because of all these issuances and the need sort of for hedging. But, I think the data has shown that it isn't as much that, and that rates is more due to sort of the fiscal premium that the market is pricing in the sort of term premium.
Do you see any sort of ripple effects that this could have on the broader bond market if we continue to see these CDS spreads continue to widen?
So, in Asia, for example, we don't have as much trading in single name CDS. However, the CDS of SoftBank certainly is indicative. And if you look at the bonds, we have the additional impact of not only credit spread widening generally, but also illiquidity of bonds when, SoftBank is actually a big curve. However, if dealers have their full, you're going to have less liquidity in the bid-ask. And that could have, in turn, an impact on investors who want to rush for the exit. So what you see is that the intraday or even intra-week volatility of SoftBank bonds are, big enough that you're always going to get people who come in to short it as a function of beta. And that is probably the biggest expression of the AI sort of trade up and down in Asia credit market.
Maybe just a step back. From a purely credit health perspective, a lot of these companies are raising enormous amounts of money, perhaps less so in Asia, to your point, a lot in the U.S. Does it still make sense to you, these big numbers? Do they worry you? Does it make sense given their plans moving forward? How do you look at it from a purely cash flow matching perspective, for example? So,
I think that the worrying part is how much more you're going to raise CapEx just through debt. Because obviously you have a whole capital structure, and at some point you're going to need to produce more cash, operationally, and then maybe raise through equity or CB market. But currently, there is some weighing on that. Of course, there is evidence of some widespread adoption of AI through all the industries, and there's a second order, third order impact. But currently there hasn't been proof out of that productivity gain, which, also not only impacts kind of generally how much more will investors take on this before, seeing proof, but also how the Fed approaches this. Because, Warsh has mentioned his viewpoint about AI productivity, but, how much time will the Fed give to see whether that comes through the supply side, which in turn, longer term, will be somewhat deflationary.
Let's talk about the Fed, because this week, surprisingly, there is a slight chance that they actually might hike, right? I think they're putting it at 30% odds right now. Does that make sense to you?
Yeah, I mean, I saw that it was even implied at touching 38%. For me, I think it's overpriced. I personally think that he will have a hawkish pause. There will be dissent. I think it will be hotly debated, especially in light of the war re-escalation. But I personally, I guess I can see the argument on the other side, which is, that they may want to do a preemptive strike here while they see, oil is climbing back up, and more importantly, that crack spreads are, going to show that the fuel prices, are jacking up again. So I think that the June data, was just seen as just one data point.
Yep.
But on the other hand, I would, argue against that sort of scenario of a surprise hike, because I don't think he needs to do that yet. I think that it makes sense to wait and see if, there is a ramp off diplomatically on the war side. But more importantly, I don't necessarily buy that argument that they need to do this for the Fed credibility. I think that when you look at the dollar DXY, it's still relatively high. So it doesn't really show that we have a credibility crisis at the moment. It's the other matter is that I think most people believe that shelter costs will start to come off. So I would say, though, that if he does not hike, then, September is very much in play, and the debate then starts to shift. It's, becoming how many hikes this year rather than when. I think that's going to be the next debate.
How has he done in terms of just communicating?
So he actually
for the lack of it.
Yeah, so I think that his approach is very much Greenspan 2.0, and to sort of keep the market guessing, and maybe it does give him maximum flexibility, and also maybe it every sentence he utters will have more impact as a signal. But what I would like to see is that he outlines this next FOMC, at least characterization of the debate. I think that it helps for everyone to understand, what they might be looking for, not necessarily the path that might be predetermined.
How are you looking at the correlation between oil prices now and what you're seeing across spreads, treasuries and like now?
So, I think that the oil prices definitely are driving the pricing implied in term premium. I would say that in many ways it's probably about the lack of predictability of Fed policy. And so part of it is because, we know that we're not going to get much forward guidance. And this week's FOMC doesn't include the dot plot. And then, broadly speaking, I think it's really about the swing of sentiment more so than anything. Because if you look at emerging market, or if you look at Asia, we're seeing more upgrades than downgrades. And we're seeing a backdrop where corporate balance sheets are not, cracking. They're doing relatively well. So it isn't as much idiosyncratic at the moment. But it is a broad concern overall about the discount rate that should be priced in. I think that's what's going on. But, longer term, if oil stays elevated, I don't think it will, but let's say it stays for a long time at around 100, then, you can see that it could affect consumer sentiment, especially because the first half of the year, there was also that counter impact from tax refunds, and that is, going away. So then it becomes about global growth slowdown. We don't really see the signs of the oil spike affecting that yet. But, I do think that the second half, there will be some focus on global growth and economic activity.
Okay, well, let's hope it gets better. Just on a benchmark, I think we're not doing too well on the bond markets. Generally, Monica, thank you. Very nice to see you. Would be something if they hiked this week.
Yeah.
Okay. Okay, Monica Hsiao there, fantastic. Thank you so much out of Triada Capital. Right, lots more coming up here on shows. In fact, we'll be speaking with Schroders coming through here about what they're seeing specifically in securitized credits. Of course, on the same sort of overlay here of large-scale financing across the AI stack. Their global head of securitized products joins us in a couple of minutes. Join us for that conversation at those times on your screens. Lots more ahead. This is Bloomberg.
In some corporate news this morning, Shanghai has moved one step closer to merging two of its state-backed brokerages as it heeds Beijing's call to forge investment banks capable of rivaling Wall Street's elite. Orient Securities will acquire Shanghai Securities in a share and cash deal worth $3.7 billion. The combination will have assets of around $86 billion, ranking it in China's top 10 brokerages. The chairman of Chinese chipmaker CXMT is preparing to share the spoils of the company's IPO after shares jumped 466% on its debut in Shanghai yesterday. Zhu Yiming's pledge to transfer millions of shares for incentive programs will see employees get stock now worth, get this, around $5.6 billion. CXMT has not said how many of its more than 19,000 staff, though, will benefit. But yeah, what a windfall.
Yeah.
Not just the hedge funds.
Spreading the love.
Spreading the love.
Mid-year bonus.
Yeah.
So we now have further updates on the price targets from the sell side here on CXMT. So we talked about this yesterday during the listing. There was one or two. Nomura, I think, was one of the first to come out. They're just
all over the place.
All over the place, right? I mean, Nomura is at about 100 plus. It's like they're talking about completely different companies. If you look at these price targets, which I guess goes to show it's more a call on the stock, more it is on the fundamentals at this point in time, given the fluctuations of the market. But yes, the latest being out of Mirai here at about $80.
Yeah, so Mirai is the latest one. They're saying chip price momentum to last through 2028. On the flip side, you have the likes of Jefferies that say, look, CXMT is China's dominant DRAM player, but not yet impacting global memory demand and supply. This is Bloomberg. $11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break in a moment. It's one of those days where, we probably do need a break here, just given the sell-off that we've been seeing across these markets, right? Nikkei is down some 4%. Topix is a little bit better, but still we're talking about close to 3% losses. And 163 for dollar yen, unchanged at the moment, but still trading on the weaker side. So certainly there's a lot at hand here when it comes to, of course, the chip side of things. That's why you are seeing the Nikkei more pronounced in this sell-off. Look at Kioxia, look at Nikon, look at SoftBank. These are the sort of the big pain points here today in the market.
It doesn't help that this is also, I think, most, if not all, of your extremely crowded trades on the chip space, in the Japanese iteration of that, right? So Kioxia, which I think we're down, as you can see, I think we did hit the limit down earlier on going into the break, right? So 18% down today. We're now down about 60% from the peak, which was just a few weeks ago, and how quickly this specific trade has really unwound. And, the latest, we're looking at two things today. One we'll get to later on, which is the circular financing situation with Nvidia and just the enormous amount of money that's being raised in that specific space. And second is this report coming through out of the information on China mass producing, relatively speaking, because we're talking about DUVs here. So not a lot in terms of thousands of volumes, but enough to move the needle on some of the information and delta in these markets. So some of the, as you can see, that's playing out in Japan, it's playing out in mainland China. There's a very distinct iteration as well when you look at markets in Taiwan, which are also feeling this quite solidly. And we're looking at, here we go. This is the Chinese market iteration in about an hour into the cash market session there. Okay, so what does this mean for ASML? Like, very, very simple question. Let's bring in our Bloomberg Intelligence analyst, of course, to talk us through this, who covers the stock and looks at the stock very closely. Masahiro Wakisugi is in Tokyo for us. You heard the news overnight, big news. Immediately, what did you think of, and how does this affect the company moving forward, ASML specifically?
All right. Yes, we have been seeing that quite aggressive localization strategy for China-related equipment. So I guess it should be true that they are developing the immersion DUV tools. But by the way, immersion DUV tool can make, say, from 45 nanometer chips to probably 75 nanometer chips. So we don't know that if it's a prototype or mass production or it's designed for 45 nano or 7 nano. But actually, like ASML should be prepared for the potential revenue decrease. It may happen in 5 years or maybe 10 years. But if ASML lose 20% of the revenue, which is coming from China, maybe 20% of the revenue could be gone, and 20% of operating profit could be gone. But if this happens in, say, 10 years, the impact could be quite small and manageable. So so far, we still think that the equipment is a prototype, so it may take some time before we see the real impact.
Yeah, closing the gap might take some years, as you say, Masa. How do you view then this push from China to localize semiconductor equipment? Does the localization progress vary depending on what tool you look at?
Right. So based on some third-party data or some data, we think that maybe overall localization ratio for China equipment was around maybe 22% last year. And overall localization ratio could go up to, say, probably 37% in 2030. But if we look at, for example, like sputtering, localization ratio last year was around already 47%, which could go up to 76% in 2030. Or maybe dielectric etch or CMP equipment have a high localization ratio at this point. So these equipment could make a good progress. And on the other hand, we still think that the lithography or process control or metrology inspection and doping equipment, these tools may make a slow progress going forward. So we think that depending on the products, the localization speed should be a bit different.
Masa, it's great to have you. Masahiro Wakasugi there, our Bloomberg Intelligence Senior Industry Analyst joining us out of Tokyo. Of course, we've been talking about not just the ASML impact in the story there today, but it's really also what we heard from Nvidia as well. This flurry of deals across the AI supply chain is reigniting concerns about circular financing. The chip designer has recently partnered with the likes of SK Group and OpenAI in deals worth more than $750 billion as investment frenzy that skeptics say is artificially could be inflating demand and valuations.
Is it, I guess, right? Is there some, how strong is the basis for some of this? I mean, they're called skeptics for a reason. Joining us here on set is Michelle Russell-Dowe, Global Head of Securitized Products and Asset-Based Finance at Schroders Capital. She joins us as she makes her way through Asia Pacific. Very nice to see you. Thank you for stopping by.
Thank you guys for having me.
How is this AI financing frenzy showing up in your world?
It's really interesting when you think about the letters AI. They're the central letters in both pain and gain.
Yeah.
When I was a young child, my dad said, no pain, no gain. But as an investor, actually, you want the gain without the pain. Right. And AI is actually the dominant headline that we see. Even though I'm not a corporate credit girl or an equity girl, we see it across all markets. That's actually kind of, I think, the point that you were just making. It's a frenzy, and you see it everywhere. And so we wonder, when we see that degree of issuance, if you look just at hyperscalers alone, on average, they issued about $50 billion in investment-grade debt per year until last year, $100 billion. Yeah. This year, projected $250 billion. I mean, that's nothing compared to the $750 you just mentioned from Nvidia. But this financing is pervading all markets, and as we crowd out other types of debt, it has impacts certainly on spreads across both corporate markets, and we also see it in my home market of securitized credit in CMBS as real estate, or in ABS as master trusts. So when you think about all the different types of ways that you might look at AI, the pain is the concentration, right?
It's not really the quality. It's more about the concentration, as some have said. So this crowding out that you're seeing, how does that impact issuance in your world too?
So actually, we see more issuance in the securitized market for things like data center, fiber, but it's a little less likely that we'll see that there than in some of the larger markets. IG finance will certainly provide the lion's share of that. But if you think also about my title, I do private debt as well. So you'll also see the same debt in commercial real estate, right? That's the buildings. You'll see the same debt in project finance or infrastructure markets. And also you have all of the compute and GPU. The thing is that it also might be a quality thing. And I think that's what people are really wondering, right? Is the quality of the data centers. Is it appropriate to finance a data center for 10 years when it might be obsolete in 5, right? The quality of the financing for the GPU, I think, can vary quite widely, which is why I think these markets require a very disciplined approach.
That's interesting you put it that way, because I just thought about, just randomly, how people finance a coal plant, and the financing for that is 30, 40 years, and then suddenly we need to unwind that financing because of just, the green movement. Now, so take us beneath the headlines now. So you're here in the Asia Pacific. What is resonating with the investor community here?
So for us, if you think about what we do, and we have a little less exposure naturally in our sectors, or we can get away from it because it's a little bit more discrete. Like if I don't want data centers, I can choose residential houses, right? So we might see in public markets mortgage-backed securities that won't have AI exposure. So if you think about it a little bit, if people have a lot of corporate exposure or a lot of exposure and they want more income, we're a sector or an opportunity that I think people can naturally come to as an alternative, right? We are the alternative investment. That's a different AI, right? And so from my perspective, I actually think this is a market where that diversification is very, very valuable. So when you come to a market like asset-backed securities or asset-based finance, you can also get exposure to a completely different set of fundamentals through the consumer, right? Or through small to medium enterprises. And so I think that's really what's resonating with clients. Clients have big questions about name concentration. And if I might give you one more interesting bit, I think AI is actually going to be more of a challenge for our risk managers out there, because when you think about how many different ways you might get exposure to a name, through an investment grade financing, through a leasing as a tenant in a building, really being able to look across where is my exposure to a name, I think is going to be one of the new challenges. Hopefully AI will be suited to helping us manage when we look at that monitoring. But it's that concentration risk and the diversification that is resonating most with people. And we see that globally. That's actually one of the reasons why I'm here. We saw some of the trend or the push into diversification of income in private debt to asset-based finance, in public debt to securitized credit. That came in the U.S., but it's very, very strongly prevalent here in Asia now.
I mean, it might be an oversimplification, but how uncorrelated is your world?
Yeah, so correlation is a tricky word, right? We're a credit product. So we should have correlations to credit markets. If the world goes to hell in the handbasket, spreads will widen everywhere, right? This is one of the things that I think is quite interesting about looking at some of the spreads from the large amount of investment grade debt that's been issued. You look at an individual issuer, their spreads may have gone from 100 to 260. But if they're delivering billions of dollars of debt in the market, what else is that crowding out, right? And so we will be correlated in that way. Where we're a little less correlated is on the fundamental side, right? So it's a different set of risk dynamics that you'd see in our markets than others. So we're not perfectly correlated. We tend to have a correlation depending on whether or not we're taking interest rate exposure of less than 0.5, as an example.
What are spreads looking like when it comes to these MBS CLOs right now?
Yeah, so it's interesting. When you make a relative comparison, right? So compared to corporates, they look nice, right? But when you compare to history, they look tight. And so even though I don't feel bad about the world today from a fundamental perspective, I do feel from a technical perspective, valuations are high. So you're really in many ways not paid to take extra risk today. So this is, again, where what we do, I think, has a nice toolkit to it, because we can actually go to shorter tenor debts. And while in the corporate market, that might feel like maturity risk, in an amortizing market, that actually feels like if I can get high income with lower sensitivity to markets, that allows me at least to be positioned to benefit if things do widen out, right? And so that's really kind of the core ethos for us across both public and private markets is reduce your spread duration, pump up your income as much as you can.
On the private debt side specifically, back to, I think we were just talking during the break that people see the headlines on private credits and caps on withdrawals, and then they make their own conclusions. How has that story evolved?
Yeah, I think people now have come to a point where they've understood that it's not a crisis. At least we've stopped calling it the private credit crisis. Right. It's a liquidity event, right? It's really important for people to understand the way that they're consuming a private product, right? Traditionally, private products were in closed-ended funds where there was no presumption of liquidity. If we then wrap them in a liquid vehicle, how do we generate that liquidity? And making sure people understand that gates are there for protection to be used. They're not a mistake or a problem, right? So I do think that story has evolved in that way and almost been taken over a little bit by questions around valuations or questions around sector concentration, right? So it's that three-edged sword, I guess, if there was such a thing, liquidity. That question, I think, has been more answered. Yeah. Sector concentration, that risk does not go away. I think it's better understood. Right. And valuation, which is the ultimate. In private debt, you have distinct companies. Everybody loves each one individually for their business model. That means there's no comps, though. So how do you value something with no comps? A little bit different than when you think about buildings or houses or airplanes, where there's comparable trades in the underlying asset, even if not in the private debt. So that's actually one of the more interesting things I think about when you think about the transparency of the markets.
Hsiao, it's great to have you here.
Thank you so much.
Very nice. Hsiao Russell-Dowe there, Global Head of Securitized Products and Asset-Based Finance at Schroders Capital. Look at how Asian markets are doing as we head to a break here right now, and we are still seeing offshore markets in China doing pretty well. Hong Kong is up against the grain here. I mean,
Korea.
A 10.1% up is a good sign here in these markets, right? Look at Korea. We're now seeing 9% losses here, session lows for the Kospi. This is Bloomberg. In some corporate news this morning, Bloomberg sources say Nvidia is set to invest $5 billion in AI startup Safe Superintelligence. This will mark one of the chipmaker's biggest bets of the AI boom era. And the startup, founded by former OpenAI chief scientist Ilya Sutskever, is focused on building advanced AI systems safely. The deal will also give the company access to Nvidia's next generation Vera Rubin platform. Chinese startup Moonshot AI says it has released its Kimi K3 model for public download. This enables developers to download, tweak, and host the technology freely, expanding the company's reach and influence in the global open software community. Moonshot founder Yang has said he wants to win users by focusing on openness and greater availability than competing U.S. systems.
Okay, we're now down over 3% on the regional benchmark, which is, as things stand currently, enough to set us up for a technical correction on a region-wide basis on this specific benchmark. So that's about 10% from the peak that we hit back on June 22nd. So it's been about, give or take, 5 weeks. The peak back then was about 280, let's call it 286. So we're about 30 points on an index level below that. So that's 10%. So we'll see what happens with this. And certainly a lot of the pain today is really seen in a market like Japan, which is shut for the lunch break, but Korea remains open, and we're down 10% on the Kospi index as we speak. That takes us now into I think the Chinese side of the AI conversation with Kimi K3, which a lot of people, when this was made public and released, were pointing to as one of the catalysts to this sort of pivot into the AI space and the downside there. So the model has drawn scrutiny in Washington and across Washington amid claims of things like IP theft, and you now have calls for tougher restrictions. But this coalition of startups called Little Tech Association argues that the U.S. should maintain access to open weight AI models globally.
The executive director, Harry Godfrey, told us more about the value that these models bring.
Well, the wonderful thing about open weight that folks need to understand first, I think the process of applying particular labels, this is a Chinese model, this is a European model, is a little bit of a misnomer. It's an oversimplification of this conversation. Yes, a set of these models are coming out of China. Some are coming out of the United States. Some are coming out of Europe and elsewhere around the world. Once somebody has an open weight model, they download those weights, they utilize it themselves. I think it ceases to be from a particular country of origin. So even if tomorrow Chinese model suddenly disappears there wasn't any additional production, you'd already have the open weight models that existed there to build upon. And so I don't think that would necessarily impact that. But over the longer term, we do really believe that the sort of dynamic of competition is so critical to continued AI development. Let me be really clear about this. The Little Tech Association is comprised overwhelmingly of companies based in the United States of America. We want to see the United States win this AI race. And the only way we think that is possible is if we out-innovate our competition. And the only way we out-innovate that, the only way we ensure that there is that sort of relentless and constant innovation is if there is real and clear competition around this. And that requires having both open weight and closed weight models out there. So no matter where they're coming from, what we think is critically important is ensuring that there is continued access to open weight models. That's why at the end of the day, we wrote the letter.
Harry, you also mentioned that you cite that rural hospitals, defense equipment suppliers, cyber security or cyber attack response teams as the people and groups who need these models. So can you clarify a little bit that you think a defense supplier should be able to use a Chinese model?
The ability to go into the Chinese model, to understand what is in that, to then take it, deconstruct it, take out any security risks that they may identify, host it on a local server. I think what we were really talking about there was the ability to have access to a model that isn't hosted anywhere else, that somebody could actually bring it entirely inside their fence line. It's the same reason why open source models are so important in the healthcare industry as well. The ability of a healthcare provider with extremely sensitive patient information to keep that information entirely inside the fence line rather than having to go to a closed weight model that exists beyond that fence line is so important. So from a security standpoint, one of the real benefits of open weight models is the ability to actually bring that inside the fence line, host that on their own servers in their own systems rather than relying upon someone else to do that, wherever that host may be, whether that is in the United States or elsewhere around the world.
Harry, end of the day, how do you think, with the information that we have now, how do you think regulation changes moving very, very short term, perhaps?
We've been really encouraged to see what the sort of how the conversations evolved over the past 7 days. We heard a week and a half ago about chatter coming out of Washington about the possibility of sort of a blanket ban on access to open weight models. We were deeply troubled by that. So on Wednesday, we issued this letter stating, here's why it is so important to maintain access to open weight models. Here are some reasonable security parameters that you can think about from there.
And that was Harry Godfrey there, Executive Director of the Little Tech Association. Of course, you can rewatch that interview and more on our Bloomberg Video Hub. Subscribers can explore live streams and our news and interviews there. Make sure to check it out at Bloomberg.com/videos.
Okay, they call it South Korea for a reason today. Headed south substantially. We're down 10% on the Kospi index. Some of the big moves we're seeing in that market, down double digits. SK Hynix, Samsung Electronics, some of the other big plays, SK Electromechanics, I think, is coming up on your screens as well. Can we get that up, guys, if we can, just to give you a sense of some of the big movers there. Samsung Electromechanics, rather, my mistake, 17%. SK Square, down about 15%. And the chart that's coming up on your screens now shows that the Kospi index is now down 34% from the peak that we hit just a few weeks ago, which now actually takes Korea from being the #1 market globally year to date. We're now number 5 and very close now as number behind Korea as Taiwan. So if these losses continue, Taiwan overtakes Korea as the best performing market in the Asia Pacific. Here's that drawdown from the peak. We're down about 33% there on the
Yeah, I mean, we're getting close to that 6,000 level, right? That was the level that was what I think the Korean officials and the Korean board CEO was saying, this was where they saw the Kospi at.
Yes,
right? So
and that was a very bullish call back then.
Yeah. Even with Lee Jae-myung, the president actually thought of this historic 6,000 point mark, and really how the chips have really fallen in some ways, literally.
I can't wait to hear the update from Goldman Sachs. They're one of the very first, of course, that tend to have a look at the big changes, if not already. So in case you guys are listening right now, we'd be interested to see what any potential updated prediction on the index that's Timo, of course, and his team. Anyway, we'll have more in a moment. This market sell-off is gaining traction as we speak. We'll take a short break. We need it, and we'll do a market check on the back of it. This is Bloomberg. Okay, here to look at terrible Tuesday. SK Hynix, TSMC at this point is actually outperforming what you're seeing over in South Korea. The deleveraging process continues there.
Yeah, that's what you actually have seen the likes of SocGen was saying, right? The trade really is Taiwan over Korea right now. And really the topics, too, in Japan, as they say, are some of the pockets of opportunities that you can still see amidst all this volatility, right? And you still see it, right? We've fallen from the peak. You really see that in Korea now when you talk about 6,100 for the Kospi.
At one point, the Kospi was double the returns on the TAIEX index, and now we're at parity on that. So this time tomorrow, we could see the Taiwan market outperforming Korea. We'll see what happens. We'll see you all tomorrow. That's it from us here. This is Bloomberg.